Welcome to the EP Wealth Advisors Informed Investor Market Update. My name is Breene Murphy. I'm the Director of Client Experience here at EP Wealth Advisors, and this is the week of September 14th. As always, I'm joined by Adam Phillips. He's our Director of Portfolio Strategy at EP Wealth Advisors. He's a chartered financial analyst, a certified financial planner. He sits on our investment committee. You may have seen his commentary in places like the Wall Street Journal, Market Watch, Bloomberg, or Cheddar, or other publications as well. We're lucky to have him here. Adam, thanks for joining us.
Sure. Thank you, Breene.
Yeah. All right. So this week we always like to start off with, what are you hearing from clients? What are they talking about as it relates to the market and the news?
Yeah. Well, it's been a little while since we've done one of these updates. We didn't do one last week, but what's really been happening the last several days is we've seen a little bit of a pullback in stocks, namely tech stocks. And so I think many they had watched the rise in some of these tech stocks. At one point, we started to see headlines, obviously, like Apple is now a $2 trillion market cap stock, right? We saw the top 5 stocks in the S&P 500 had grown to represent about a quarter of the S&P 500 index. So now that we're starting to see some of these fade a little bit and give up some of their recent gains, I think a lot of clients are wondering, is this going to turn into something more sinister? How much further does this sell-off or correction have to go? I think that's one of the big questions that I'm hearing a lot about from clients, since so many, I think, since this rally really began in March, so many have been skeptical that this thing had legs and could be sustained. And so now that we're actually seeing some downside volatility, I think many are just wondering how much further we have to go.
Yeah. So with the investment committee, yourself and others included, what are the things that you're looking at that help put context behind this recent market slide? And is this here to stay, or what can we expect?
Yeah, as far as whether it's here to stay, it's a tough one to answer, right? It's so hard to call these short-term moves. I would say that we're not too surprised by recent weakness that we've seen.
Why not?
If anything, it's to be expected. We have seen that these sectors in particular, these technology sectors, had become quite overextended. At least over the short term, and you can look at a number of measures to reach that conclusion. So at some point, you have to expect some profit taking and maybe some slight repositioning among investors across their portfolios. And so we're not surprised about this. When we see this type of volatility, though, in trying to determine how much further this may have to go, we're looking at a number of technical factors. First, we're looking at is this weakness, does it extend beyond the technology sector? And one of the things that we've actually seen is that companies outside of the technology sector have actually held in fairly well. They're still selling off, but they're outperforming technology, which is a good thing to see. It means that the sell-off does not have this breadth where everything is losing equally. It's really, you're seeing those names that have done so well recently fall the most. Take that a step further. We're looking at signs of if investors broadly are selling stocks right now, are we seeing a flight to quality? One of the ways that you can measure that is the 2 categories for consumers, the consumer discretionary companies, so those i.e. retailers, and consumer staples companies. So think your grocery stores or your just staple products. If you saw a flight to quality, you would see those staple companies outperform as investors looked to shift into those safer more. We're actually seeing that over the last 2 weeks during the course of the sell-off, and as this volatility has come into the market, we're actually seeing discretionary companies continue to outperform staples. So to us, that's a very good sign that this does not have a lot of breadth.
What about the policy measures behind this?
Yeah, I mean, one of the things that I think is quite timely right now is we talk about policy. There's a couple different factors that you need to look at there. Let's start with monetary policy. So what is the Fed doing? The Fed has been quite supportive since this pandemic began, and that's really continued over the last couple of weeks. Just a couple of weeks ago, we saw Fed Chair Jerome Powell come out and make the announcement that many investors had been expecting, something the Fed has been considering for quite some time, and it's that they are going to shift their approach in determining the course of monetary policy. They're going to be using average inflation targeting. There's a lot of jargon in there, but really what it means is that historically the Fed has targeted 2% price growth, 2% inflation. They haven't been able to get there in recent years, but that's really what they've used as kind of their benchmark for ideal level of price growth. What they shifted to is this average inflation targeting, meaning that when inflation is undershooting that 2% level, that means that they're going to allow for inflation to overshoot for some time. What this really means for investors and why it's important is that as soon as inflation hits that 2% level, investors don't necessarily have to worry that the Fed is going to start removing policy accommodation. They're not going to start raising rates. They're actually going to allow rates to remain even lower than previously anticipated. And that obviously is a good thing for markets, just having that accommodative policy on the table for even longer.
So we have we have good monetary policy in place for growth, right? Now, do you want to transition over to the fiscal side of it? Because I know that there's been a lot of movement, a lot of change over there this year, especially.
It's really the fiscal side that's left something to be desired of late. We've seen a few fiscal packages announced since the beginning of this pandemic. Started off, it got off in a really strong start. Quite frankly, we've been waiting for an additional fourth fiscal package for a few weeks now. We've seen both Senate Republicans and House Democrats come forward with their proposals. They're still quite a ways away, and time is of the essence right now. That the House actually today is coming back into session, but they only have about 10 working days until they go back on recess, and they're likely to stay there throughout the course of the election until after the election. So it's really become quite imperative to get something done, but I think many are losing hope and wondering if we're not going to see another fiscal package until after the election. It's something that the Fed has been quite vocal about, saying that the Federal Reserve can only provide so much accommodative policy support. At some point, you need to look to other measures like fiscal policy.
Right.
The Fed has already brought rates down to zero. They're already buying bonds, doing what's known as quantitative easing, and providing some liquidity for corporations. And so they can only do so much. At some point, you really need to look to Washington for support for small businesses, for state and local governments, for individuals, and I think that's really what we're waiting for right now.
Okay. So as you all are looking at this short-term slide and volatility, is that changing EP Wealth Advisors' asset allocation? From our investment approach.
Breene, it's really not at this point. So right now we've seen the stock market kind of bounce around. If you look at the S&P 500, we're only down about 5% from the all-time high in stocks, even though technology stocks have corrected about 10%. Okay, so we haven't really seen as much weakness as one might expect, just given the magnitude of the swings we've seen in recent days. That being said, we would expect this volatility to continue. I mean, the reality is we're in the toughest part of the calendar. Just looking at history, this is a pretty tough stretch, especially coming up to the election, which is about 50 days out. We would expect this volatility to remain with us. I think the question is, should we make any changes in anticipation of this expected volatility? I think the answer is really no. We want to be nimble, but we want to still have this long-term discipline. We expect this volatility to continue, but it is an environment where uncertainty is quite high. And we don't want to necessarily make short-term moves based on these expectations or based on various assumptions, because really November could go in a number of directions. We continue to see the polls change, and we're really not going to know until the election is decided. At that point, that's when I would expect that the investment committee will make some changes to position portfolios for the next environment. But I think right now we just wait, we remain disciplined.
Okay. Okay. So for those clients that may have more questions, what should they be asking their EP wealth advisor about their personal portfolio?
It's I mentioned volatility is likely to be with us for some time, and that hearing that may scare some viewers, and so I say that to set expectations, not to raise alarm, but if those who are watching do have questions, I think it's a great time to just meet with your advisor or have a conversation with them, see how your current portfolio matches up with your financial plan. Make sure you're in the right asset allocation for you. And so if we do see this volatility over the short term, you know that your portfolio can handle it. It's not going to throw you off course over the long term.
Okay. Adam, as always, thank you. And we like to wrap up with some fun questions. So those of you who tune in regularly, you may be able to see that I am not in my normal location. I'm having to work in my old bedroom where I grew up, which my mom now turned into a studio, and she paints. So Adam, I'm curious, where have been the most unique places you've had to work during the pandemic?
Oh, wow. The most unique place. Um, well, I have, I kind of hop around to where the kids are not. But I've done some in the playroom while the kids are napping, while my wife is in this office. I've been on some good conference calls there. Right now, my wife is actually not here, and neither are the kids, so I can be in our home office here that I usually share with my wife. I'm actually on her computer, and mine is right over there. But I prefer her setup today.
Okay. All right. Great. Well, Adam, thank you so much for joining us. And for our listeners that were tuning in to the market update, thank you for joining us. If you'd like to subscribe, you can subscribe through our YouTube channel, and you can also subscribe through our blog. And we hope you have a great day. If there's any more questions, please feel free to reach out to us. Thanks so much.